Tom Lee must be out of his mind. This might be the craziest bull case I've ever heard. And the wild thing is, all of his bull case from 2019 have been spot on. Now let's take a look at this video from Tom Lee explaining his reason why.
And there were people that said the S&P wasn't even going to make $60 again for a decade. That's why in the GFC, everyone said expect a decade of low returns. And I saw countless models. People said, well, inflation's going to be weak and GDP, and so it'll take forever to get to $60 in earnings again. Well, the S&P 3 years later had $90 in earnings. And, you know, and now earnings are expected to be $280. Okay. So we've gone from $60 to $280 in 14 years. Why do people suddenly think earnings are going to peak at 280? I mean, S&P earnings, you know, is going to be over $1,000 per share in the near future. And I know it sounds incredible, but one of the things driving this, and we've written about it for our clients since 2018, is that the world is running out of prime age workers. So we have population growth, but it's growing faster than the number of people that actually can work. That difference in population means instead of paying wages, you have to pay a company to produce a machine for output. Okay, so that money is recycled into the S&P. By the end of this decade, it's almost $4 trillion a year in wages that are no longer paid to people, but to another company. If it's AI related, that could mean NVIDIA's revenue could be $1 trillion by the end of the decade. And NVIDIA's revenues are 100 billion right now. So NVIDIA itself could be a 10x. I mean, I think people are unimaginative when they don't realize they're not looking back far enough. In 2008, people didn't think S&P earnings would get back to $60 for a decade. So that's 2018. They didn't think we'd be back at $60.
S&P 500 at 1,000 per share would be absolutely insane. And he has a 3x projected for the S&P 500 by 2030. NVIDIA might be a 10x by 2030. Sounds like a fairy tale. At this moment, it just doesn't make sense. But he's been so accurate that I just can't look past it. Here's another video of Tom Lee explaining which sector will be bullish based on who's elected president during this election.
Markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probability shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut. And really the probability of a Fed cut, you know, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah, 40% by the end of the summer.
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's... You know, day to day, it could be noise because last week you had the biggest down week for the NASDAQ in quite a long time. So I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, you know, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, you know, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Now let's take a look at this quick article from Barron. Interest rate cuts are coming, and what are the possible stocks that looks attractive? Stocks of companies like Zscaler, Cloudflare, Datadog, and even CrowdStrike, as we all know, they were the main reason for the cybersecurity chaos that happened last week. Their stock have taken a beating. According to Vince Howard, CEO and portfolio manager with Howard Capital Management, stocks like Eli Lilly, Regeneron, and Merck, and software giant Salesforce might be a bargain. And also rate-sensitive small caps and regional banks and real estate stocks also might be a bargain at the moment. Before investing into anything, please consult with your financial advisor. Don't forget to like and subscribe to the channel, and see you next time. Thank you.